let's go live and check the entries. Again, if you're short, you want to hold until next week, 153.60. 153.67 is the breakout low for this week. It's probably going to be the week open next week. So you want to hold until you see this level if you're not seeing it now. If we get to see towards the end of the day, we close out shorts and re-enter below 155.67. That level here. Okay, let's take a look at the longer term first before we move to the shorter term. Okay, so the longer term means we're going to be using these two risk matrices. Well, let's take a look at an important development first. This is today's 4-hour chart. We're having degree 3 momentum, and this was 4-hour chart beginning of the week. We were having a zero line rejection, so you can understand that there's a very strong bear trend down. You could even be seeing a double head, and this could break lower. So use of these trade matrix sheets or Excels is only tied to confirmation for entry. So we were having a confirmation at 156.5. We were going to take this all the way to 152.3. We're still in that trade. We're using that trade matrix now to use newer levels. The stop, of course, was 157. It allows us to immediately know how much size we need to use if we are going to be using only 4%. So if we're tied to 4%, automatically when you put the stop and you put the entry, you just get the size. Relates, of course, then you can do whatever target you want to do, and you expect this kind of rewards. So if we're at 156, we're using that matrix. We can now bring the stop down to entry. All right, of course, 156.50 is that level here. We're going to have a stop above level 1. Level 1 is actually 155.5 above level 1. So we'll have a trailing stop at 155.5. We are looking now, we're no longer having negative risk. We can even add to the position. We're looking at 152.30 again and 153.60 today. Next week, we are looking to change this entry. Instead of 156.5, we're looking to short 155.3 and 155.2. The stop is above level 2, which is coming in at 155.8. We'll change that. So we're looking at this so that everyone can do it on their own. And it's the same targets, probably equal measures of yield. Now we're looking at reversal 153.6 and 152.6. These are going to change. We cannot use that matrix until we have a confirmed bottom. Once we have a confirmed bottom at either of these dashed white lines, we know immediately that we simply enter the levels of confirmation. All right, we enter the stop. Okay, we know that the risk is tied to 3% or 6%, whichever matrix we're using. We have different matrices for different risks, from 3 all the way to 6. Over here, we're looking at 6 because we expect to go all the way to 162. So we want to make the most of size. Of course, we'll be buying into the market bottom. So we're just introducing the matrix so that we all know how to use it as of coming trades. Automatically, we get fixed risk at 6%. We remember what was said earlier by the wizards, that you cut down on losses and let your trades run, let your profits run. All right, let's take a look now at the internal short-term trading. Short-term, we're looking at shorting below 155.67. It's not shown on that chart, but it was shown on the 1-hour chart, I believe. Where is that 1-hour chart? 155.67, because that's segregation of fibs here. Once we get that correction, maybe we'll get this level this week. I doubt it. Maybe we'll get it next week. If we ever get that level, it's a short with a stop at that yellow arrow. 156.5. It's about 120 points from entry. You're entering 155.3. Your stop is 156.5. 130 points for entry. Very important entry, probably because it is going to 151.3. So you're looking at 400 points neat. Let's take a look. You are looking at 400 points neat. So today, if you get to see that 153.67, you still have shorts, we would consider to close them. You're looking at a 1, 2, 3, 4, and a 5 here, and that is just a 1-hour chart. So in a preliminary manner, you expect there's going to be a correction. Remember, the neckline, this should be a level 3. You must have a level 4, some kind of a level 4. So next week, we're going to be shorting below level 1, 155.26, which equated to 155.3. Probably 155.2 and even 155. As the market drifts lower, all we have to do is just throw the fibs lower, wait for a bounce, short as close to 50%, 38.2% as possible. Okay, if we want to fine-tune the entry, probably next week now, not this week, we would want to take this to a lower segregation. We're using a 15-minute chart here to see what the internals, what is exactly happening, and this is the origin of growth. You're having an internal 1, internal 2. All of this is just an internal 3. The importance of these internal 1s and 2s, let's use these levels, is to know already we are traders. We don't really want to have too much analysis that will cause us paralysis, like they say. We only know where to get in and where to take profit and be out. So now this segregation shows that this is an extended 3. The next correction is a 4. Will not rise above this level, 155.37. We're looking to short, of course, next week 155.2. But this segregation also confirms that if you really want to be making money trading this now, you can just short the market, but not on Friday, of course. Short it on Monday with a stop above internal level 2, 155.82. So if you have so many Excel sheets and you want to invest always, Forex markets are growth element in the fact that the market is always moving. The market should always be yielding you money. So if I'm going to invest 10% all the time, for instance, really in the most lucrative, most volatile issues, sterling yen is one of them. So I'm going to invest 3% in this all the time. So the market is now doing 153, but that is on Monday, not today. Okay, so MAX is doing 153.95. I'm going to sell at the neckline 154.3, very low, 154.5. I am in a bearish trend. I don't really want to wait. I want to be making money every day. So why would I do this? Because I am having a stop here that is just 3%. I'm only risking 3% on that position. So I may even invest half of a mini automatically using my Excel sheet, 0.75 of a mini, 0.3 of a mini, anything. And I know that I will just take profit at a specific value because I want to increase my equity by 1%. So maybe I'll take profit $50 down, maybe I'll take profit $70. I also have to relate with the pivot levels, of course. And I would invest these 10% across the board in the lucrative issues that keep moving on the daily time frame. So this chart tells you that the market cannot rise above 155.7, and therefore if you're going short at 153.7, for instance, let's just say you're going short at 153.7, 200 points away, you will only, if you want to only incur 3% or even less, 1.5%, then you're going to be using, actually one mini will incur $200, 2%, bit too much. So you will use, for instance, half a mini is going to be $100. You lose 0.75 mini is going to use that $200 risk, fixed risk. All right, and you're looking, of course, at the lucrative profit as you move down.